Hello everyone, and if you saw my last video, you probably are aware of me talking about a dead cat bounce. So what exactly is a dead cat bounce? Let me just zoom into it, and this is exactly what a dead cat bounce is. So the cat kind of like bounces, dies, and it's just kind of like bouncing at the end of it here. So let me just analyze the S&P 500 for you in a little more depth to tell you what exactly has happened in the last week. Now, if you look back, I haven't really posted in the last week, and there is a reason for it because I had predicted that the market would go into a dead cat bounce. This is where the market has finally produced the dead cat bounce to you, and now I'm going to tell you what's in store for the rest of this week. So let's stay tuned and understand this market a little bit more better in terms of its technical analysis. So this is the daily chart that I have in front of you. I am looking at the S&P 500, and this is where the market, let me just zoom out and zoom in so you get a better picture. So this is the S&P 500 from 2020. It went up to an overbought territory all the way up to the 4,800 marks and then started collapsing. It kind of bounced back from there. It's like you kind of try to drown someone in the water, and it's just coming outside the water to gasp for one more gasp of air before it kind of is submerged again into the water. And that's what's happening here. It's trying to come up again. Now, where exactly is it coming up? So as you can tell, it's 20 period moving average line, which is the yellow line there. That's the line that the market is holding as its strong support or resistance. That's the guideline for the market. So if I recap, the market's touched the line, touched it again, bounced through it, then the 50 period moving average line came into the picture, bounced through it, touched this line. So this was interesting to me. Okay, so this is the daily chart again that I'm on. I haven't moved yet. The market went through this 20 period moving average line. Now, in general terms, if the market ever breaks through this 20 period moving average line and it's sitting on top of it, that would, in general technical analysis terms, indicate to me that, okay, the market has overcome this 20 period moving average line. Just like it did here, actually. It went on top, but on the top of this, it actually had another 50 period moving average line. So it went up, it bounced around for a few days, then fell down. So I did actually expect that the market would kind of like hold up to this line, but it could not. Even though it surpassed this line, it just fell through and fell down. So this period of resurrecting itself from the dead, you could call it, is in I guess layman terms called the dead cat bounce. So it did bounce out of it, and now it's been hovering around that area, and now it took another collapse. Today the collapse was around 3%. So it's just fairly large, very significant in terms of the technicals. But now comes the question, what's next in the coming week? What does this mean for us? So before I tell you what's in store, let me just look at the weekly charts. Now, just to sidetrack you for a second, what I do love is having all these different charts in one window panel. So if you can actually split this into 4-8 panels to get different time perspectives. That's my favorite way of trading, rather than just kind of like flipping between different time frames. I do not enjoy that. Now, TradingView does offer it. Unfortunately, I am not on that plan right now. I do not have the premium plan. It's usually around here where you could kind of split the screen into 8 parts, 6 parts. So my sweet spot is 6 different slots. So what I would do is I would have the monthly, the weekly, the daily, the 4 hours, the 1 hour, and the 15-minute time frame all in one window. And that gives me a better view of the market. It helps me trade better, makes me make more educated decisions on how the market's trading. Okay, that's just a sidetrack. I hope I can show you how to set that up. I hope I can give you some perspective of what that would do to you in your trading by looking at different time frames. But now let's look at it one chart or one picture at a time. So this is the weekly chart again. So the weekly chart, as I can see, it's kind of like bounced back up. It did not touch the 20 period moving average line. It fell down. It went through the 200 period moving average line, and at the 200 period moving average line, there was an expected bounce. Now, because the 200, let me just show you how important this 200 is. You can see the bounce here way back in 2018. That's how important is it. Let's go back 2016. It bounced, went up from there, bounce, went up from there. So it is a very respected technical line, and that's what we've seen here. The market has bounced and gone up from there. Now we've seen a small collapse since then, and the reason why is also you can see the top here of this. This is last week's candle. The entire week is one candle, but if you look at the top, you could see that 3916 is the very, very highly respected line. That's the reason why the market was not going above it. It tried on a daily basis, could not hold true, because that's a very important line in terms of the technicals. It's like, it's gone over the entire 1 week. Now it could not hold true, or that's why the market was hovering around the 3916 for almost most of yesterday actually, and a bit of today, and it then just broke through it and went down to the 3830 mark right now. That's where it is right now, but it's gone down. So the market's not able to hold its support on top of this, and that's where it's trying to find its new correction. So this is not the best time frame to tell you, because we are, even though midweek, we still have a lot of time to go before we could actually tell you where this is actually heading. So before I give you more details into the forecast for this coming week, let me just look at the monthly. As you can see, the monthly is it hasn't really touched the 50 period moving average line. It's if I look back in history, it's supposed to pierce through it. Well, this March 2020 is not something that we can actually say it really did. It pierced through it, or at least touched it. Let me go back. Oh, I don't see anything about 1998. But in most cases, it actually would touch it or pierce through it. Now, in this case, it's still hovering on top of it. Now, on all fair terms, if the market actually starts bouncing up from here next month, you will see the 50 period moving average line just kind of like correct itself and pierce through it. So the moving averages do that sometimes. So keep that in mind. It can be susceptible to a little bit of forgery in the markets, and if you look back, it's like perfectly aligned, but not always. Don't get fooled by that. Okay, so the monthly, yes, it's still in a downtrend. We are heading down. How much are we heading down? Let's look at that. So I really like looking at shorter time frames to tell you what's in store. The monthly and weekly is what you should always have at the back of your monitors, or not monitors, but back of your charts. Just keep it around, always static, so that you know where the market's heading long-term wise. And short-term wise is where you could now decide on, okay, what's a good time to get in, what's a good time to get out of the market. So this is where it is right now. It's taking a nosedive. Now, I want to show you a few patterns so that you can recognize and identify what's happening here. So let me go back a little bit in history to tell you a little bit about these patterns. So the market crosses, okay, this is where I'm right now. The market crosses this line. It bounces around for a while, crosses this line, and goes back again. The market then hits to a low. It bounces around a few times and then comes out and resurrects itself from the dead. Bounces itself. It goes choppy for a few days, choppy for a few days, choppy for, well, this is a very volatile choppy, but for a few days. Again, choppy for a few days, 1, 2, 3, 4, 5, 6, 7. Then it collapsed on the 8 days. So 7 is like the average choppiness you might see. Again, you're choppy for 1, 2, 3, 4, 5, 6, 7 days, and then it bounced out. Now, this is where we are right now. So can you tell me, by looking at the past patterns, what does this indicate? Does it mean that it's going to go down in the V? I hope not. I can't tell you. If there's like some bad Fed news that comes out tomorrow, the market's going to just like collapse. But looking at the trends, it usually stagnates itself for a few days before it decides its direction. So where is it right now? So it's one thing that it's done is that it's actually touched the yellow 20 period moving average line, and now it's possibly going to be heading downwards. The only way that it could head upwards is that if it tries to break through the yellow 20 period moving average line and head up, and that's where it may touch the 50 period moving average line. But I think it's still got a long way to go in order to touch that. The first thing it would have to do is to pierce through this yellow line. So like time will tell how that's doing. But the important thing to keep in mind right now is yes, it's broken through this line and it's closed below, which is a sign that there is a weakness in this particular trend that you're seeing up. But because it's closed below, I don't see a direct V. Markets just don't go like, up, down in like 2 days like that. It tends to kind of wobble around, just like this was here for a while. Now, if you want to tell, so this is where it touched this line. It still wobbled around for a few days before it collapsed down. I do feel like it may wobble around for a few days before it actually maybe takes a bigger nose dive down. So it may just kind of like touch this. It may, may come down, or maybe just slowly, like it may kind of slowly descend. That's also possible. It may just stick around to the yellow 20 period moving average line for a little longer and kind of like bounce around the bottom line of it. So like, something like this and bounce like that. So that's something that I can expect, but I do feel that it may wobble for some time, just like this or just like this. Like it's basically doing it everywhere, but it is kind of wobbling and then kind of declining steadily, or it may just like, so news will dictate what happens, or how aggressive of a V this is in the decline, or if it's trying to go up. So it can go in two directions again. Like it may go up if it pierces and breaks through this line again. It may go up, but the more likely trend that I see, because it's touched this and it's now closed below, is that it may just kind of like hover around this, wobble around this particular levels, and gradually then start sinking down, either touching this low again and then bouncing up, or it may just like pierce through and go down further. So that's just my take on like where the market's heading right now. So another important thing, so I just, before you could even see it, I moved to the 4-hour time frame, and I moved there for a very important reason. So you were wondering probably, why did the market, I showed you on the weekly chart that the market did respect the 3915, and that's where it was. So this is the 4-hour, and you can see it did pierce through the 50 period moving average line, and it stood its ground between the 3932, 3938 something, again bounced up, bounced down, and then finally collapsed. Now, what was strange to me is that it did not even make its way towards the 200 period moving average line, because this is a really strong line. Maybe the traders or the big traders had simple moving averages. A lot of the traders use that, so maybe that's the reason why there's a small delta between these two. There's a delta as in gap between the two, but that's where I feel like, so it's actually gone down, touched the 50 period moving average line. That's where it's right now, but as you can see, it's closed at it. If the next candle closes below and heads down, then it's going to start heading down towards this line. So that's, again, this is the 4-hour. If you look at the 1 hour, it's crossed the 200 period moving average line. It's held lower, so it's already broken through in the 1 hour time frame. 1 hour just gives you a quicker reaction time to what's happening. And if I don't look at the 5 minutes, I won't even bother going there. 1 hour would be, or 15 minutes if you're like an active day trader. I would never recommend trading anything lower than that. But yeah, this is just something that you could use to decide on, okay, what's happening here. Now the market's kind of like resting. It just fell down, gave a lot of people heart attacks, and not in literal terms, but like, you know, for the faint-hearted, they were really troubled today because of the big decline. There was a lot of news today that, oh, Bitcoin's going to be like, you know, the cryptocurrency market's like out of its misery, but that's not true because crypto also fell down 3% today. But this is not about the cryptos. This is about the S&P 500. So to summarize, what did I share with you today? The first thing is, keep in mind, and this is the daily chart again, the market has or would possibly wobble around because it's, you know, kind of like gone up, held its ground, fallen down. It may just kind of bounce around and held lower. The important thing to keep in mind is this 20 period moving average line. Does it actually pierce through it and head up? If it heads up, it's going to go towards a 50 period moving average line. If it heads down, if it bounces around it, it's just going to like use that as extra downward momentum and just like kind of like nosedive downward. So just keep that in mind. If you start shorting the market around after it starts wobbling downwards, your next I guess target would be the 3671 range. So keep those milestones in mind. I hope you are successfully trading in this downturn market. And when I say successfully, I mean you should be shorting and also like buying when the trend changes. But in this particular market, I would not recommend buying because even if you were to trade this small 3-4 day uptrend, it's a very small gain in terms of like the losses that you, the shorts that you would gain by trending the downward direction. So I'm trying to train you to be a flexible trader, not just like buy. Right now there is no buy, but there's a lot of sell. So like sell and then buy, which is short sell. So I hope that's useful to you. I hope you got something out of this video. It was able to educate you into how you should trade, what's a good anticipated move coming in this week. And do let me know, like, you know, your comments. What are your thoughts? Do you like the content? Do you want me to analyze another stock that you are anxiously trading, or just something in general? Let me know and I'll be happy to help you out. With that, see you in another video.